All right, thank you, Bwana Deo Gracious. I thank you, Bwana Charles Rugendo, for the opportunity given to me, to the entire leadership of ICAO, and of course the audience that I have today. Thank you really for having taken time off your busy schedule to listen to me, present to you investment club strategic planning for investment clubs. Just like I've been introduced by Deo, I am a passionate investment club resource person, having been part of Group 20 Investments, where I've been chairperson on taking on, on around 2 intervals, and also where I've also been in charge of investment. I was the chairperson for the investment committee at some point. So I've served on the leadership of Group 20 Investments in 2 roles. And I really, through all this time, I've been able to see the dynamics of investment clubs. Of our investment club, to survive the very good and the very difficult times to make us achieve, at least reach the 12 years of existence that we have today. I have also been privileged through my membership of ICAO to be part of ICAO, where I was a member, and I was also part of the leadership committee, I think from around 2014 to towards 2000, shortly before lockdown, where I was part of the leadership. And I think it has made me interface with a number of clubs. I've seen quite a number of the issues that are unique to investment clubs. One of the biggest mistakes that people do is to look at investment clubs as companies or as big businesses or whatever. And there has not been a well-tailored arrangement. Okay, some have tried, of course, quite a number of institutions are now trying it. But previously, there's not been well-tailored resource information that would help investment clubs grow or try to manage the management challenges that they have. So today I look at investment clubs, and I will immediately share my screen. Again, just like the Gracious had put it, I earn my bread at Airtel, where I work with the Airtel Money section. I am in charge of the Airtel Money Pay product. So for those of you who have businesses out there, who have investment clubs that are involved in trade, and you want to receive payments from your customers, we are ready to serve you. Of course, we know that investment clubs also do receive money from their members via Airtel Money. We are also ready to offer that service. So I will concentrate on why I'm here today. And in doing so, my presentation basically is strategic planning for investment clubs, a presentation to ICAO, and this one has specifically been made to suit the investment clubs, which I know are humble institutions that are being created by humble Ugandans out there, seeking to grow into big institutions. So what then do we look at as an investment club? The definition of an investment club here, in my view, is that these are a collection of individuals whose objective is really putting together some capital with the aim of using the collected funds for investment purposes. Then what then is the investment? Investment here is the committing of money with the expectation of obtaining a profit. So we're basically looking at this as a way of making money, and there is nothing more than that. We look at this as a process, and most importantly, I think one of the most renowned investors is Warren Buffett, who says it is the process of laying out money, now to receive more money in the future. So this is what we want to concentrate on today. Then there is the bit of strategic planning, which is now my area that I will have to dwell around today. Strategic planning has been defined by scholars as a process of looking into the future. You identify the trends and the issues against which to align your organizational priorities to execute towards the ultimate bigger goal. So strategy means you're looking at a bigger goal. You're not looking at small goals. However, as you'll get to know, the small goals provide the milestones that lead you to the bigger goal. So we go then to the next part of it to understand exactly what is the investment process. An investment process involves, first of all, planning, then you save, then you invest, and then monitor. So our first bit will be so much on the section of planning. And please note that this again, when I say investment for the bigger goal, it must also be for the long term. So you plan for the long term, you save for the long term, you invest for the long term, and you monitor for the long term. One of the biggest issues that we had as Group 20 investments is that some people kept on asking us in the membership, you guys, we started maybe as Group 20, I just need to tell you that we were 12 members. We really wanted to make 20 as per how our name stands, but somehow we only got about 12 people who are like-minded. Quite a number of people at our time were not interested, those who had interested in the group and in joining us. So we started as 12 people and kept on looking for others whom we never got. But along the way, as we were trying to steer to look here, for us, I think after around 2 or 3 years, we believe that we should start earning money. And in doing so, there was a very big problem of cohesion, where quite a number of people felt like we needed to, but a number of things managed to resolve that issue. One is the leadership. Two was the continuous engagement as a team for us to know that actually we are in this for a long term, not for the short term. So for us, actually, we looked at the investment club more or less as a religion, where you need to be going to renew your vows, and maybe as a marriage or something, where you need to renew your vows and faith in the investment club. So this is very important. Otherwise, you will find that many people will start looking at short-term goals, and that will also make you invest in short-term arrangements, and these short-term arrangements can cause you trouble. So the first step in looking in strategic planning for investment clubs is, first of all, finding the purpose for your investment club. And the first level is to look at what are the members' goals. If you don't look at this, you'll find yourselves having wrong goals as a group. So the first step is to look at member goals. Then later, you build the member goals. You build the organizational goals from the member goals. So what normally are the goals for the members? Many people want to, certainly you want to increase your capital such that you are able to have more funds for investment. Some other people actually use it to learn. I will tell you that personally, because my qualifications are into business and financial services, I'm quite a fast learner when it comes to understanding these dynamics. But within our group, we had a number of people of different qualifications. So we have, I think one of them is an electrical engineer, we have a civil engineer, we have a number of others, a telecom engineer. Some people felt like they needed to understand all these things, what we mean by investment for a long term. Some people, so in aligning this, you needed to match with some people. You match with the slow learners such that they're able to understand. Otherwise, along the journey, they start withdrawing their capital. So learning how to invest is very key. So improving saving habits is also another thing. I will also tell you that I was poor at saving, but I think Group 20 has given me the biggest opportunity to save. So of course, there is the Social Security Fund that we do with the NSF. Investment clubs provide an opportunity for you to also do social security. Then because beyond your NSF, some companies don't have provident funds or what we call in-house pension funds. So when you have an investment club, or even if you have it, it provides you additional social security. I think one of the beauties of an investment club is to share the risk. When you start a business and you put in, let me say 10 million, and you lose all the money, you will most certainly find it difficult to come to invest again. So if you are 10 people and each of you have put in 1 million each, so it means that all of you, if you lost the 10 million, at least you will have lost 1 million each, and somehow you can absorb this risk. So shared risk is a very important aspect for investment club members. But I think there is also the bigger opportunity to build an institution for the future belonging. Many people would like to belong at old age, to belong to a certain group of a society. And I think investment clubs provide that opportunity. At old age 50, you get isolated because age, as you grow, you start becoming very few in the population dynamics. So the younger people take control. So when you do not have an institution that you belong to, you're most likely going to find yourself isolated. And so it becomes an issue. So it is important that you become part of an investment club for your future. Now, all these interests form what you should think of in your strategy planning. So please, if you have reached a point where you're not able to hear me, please feel free to alert me.
Yes, we can hear you.
Okay, so I did some people, there's someone who has sent me a message telling me that they are not able to see the presentation. Is that true? Can I hear from members?
No, it can
We can see your presentation. Maybe you could put it
for
in
me,
presentation
I can see
mode.
it.
In presentation mode.
Yes.
Okay, let me see.
Oh, the person who can't see it is the network, their network.
Presentation mode. Okay, let me see how I can do that.
You could go to on your screen.
Yes.
Where you can on the right lower side of your screen.
On the right lower side of my screen, where I say more.
Yeah. Where you see, sorry, something is happening on my screen. Plus the minus, just before the minus, there's a small icon there where you can zoom in and out. There is a small
just
icon.
press F5.
I'm seeing more.
Function 5 on your keyboard.
F5, okay, thank you. I have pressed. Are you able to see that?
Not yet.
But you can also click on slideshow.
You can click that. Yeah.
Click on slideshow on the slideshow tab. It's up there next to animations.
Animations.
Slideshow is way up there.
I think he can let him continue.
No, the next one, slideshow. Yeah, and then you just click on the first tab from beginning, and then you can always get to the next one. Yeah.
Is that fine?
Yeah. And then if you click any button, it will go the next one. Yeah.
Okay, so thank you. So I think this is where we had reached looking at the member objectives. So the reason why we have to go through this is because they make the basis of what you want to achieve as an investment club before you start looking at strategy. Otherwise, you're most likely going to build castles in air. So the ultimate bigger goal then is, what is the organization purpose? And this is where members come together and entrust their interests or goals that we have discussed above to the club. And therefore, they need to institutionalize those goals for their benefit. So this takes us into the biggest issue, which is the identity of the club, its ultimate goal, and how to pursue the goal. So we look at the vision. So what is it that you want to be as an investment club? Because you're making an investment club today at 20 years or 25 or 30 years. What will this club be at your age of 60? Now, today, if you're saying you're an investment club, really, will you be an investment club at your age of 60? My view is that at your age of 60, you will no longer be called an investment club, but you will tell the story of how your foundation was that of an investment club. So you must ultimately start building a bigger organization from the beginning. Because I do not believe that at 60, you'd still want to be a club. So the vision is very important. And this you must define, something that you want to see at your age of 70, at your age of 80. So as groups, you need now to start, you need to discuss and agree. You need to agree on what exactly you want to talk about. Then the second bit is the mission. The mission is how will you go about. The mission is how will you go about pursuing the vision that you're talking about. How will you go about pursuing that goal that you're talking about? So this is very, very important because at the end of it all, you lose it. Then there is the bit, I hope you're able to see the other objective. The other bit, it's now the values. So you need to define the values that you will use to define yourself as a club. I will tell you that as an investment club, we have decided to have integrity as Group 20. And we have had to ensure that from the word go, we comply to tax. So we have an auditor who will tell us, we'll look at our accounts, and you will have to, if we have even missed to pay tax by a shilling, we must make sure that we adjust our returns for that amount. And the reason is simple. Whatever you hide today will eventually come back to you and bite you. And the worst fight you can have as a business is to find yourselves in the bad books of a taxman. And we have also there are many issues that have come in where they have found us, and we again have had to go and sit and engage with them and make sure that we close those issues. So integrity is very key in doing, in trying to pursue your club interests. Sorry.
Thing is jamming to mute 100%.
So we've been able to define we hope that as a club you will be able to define what your vision is. For example, for us, we want to be a renowned social security house that has been known to have, that shall be known during our old age, to have really as an institution that has really helped to provide social security to its members. And we want this to be seen in the lives that we shall live as a group whenever somebody looks at members of Group 20, they know that indeed Group 20 was able to look after them. So today, up to date, we have never received even a dividend in our group because our purpose is purely for the future. So whatever small amount we make, we take it back as a business. So then what is the strategic planning process? The strategic planning process, therefore, starts with one, I have talked about the goal and everything. So you need to set the goals, which I have put there, and these must be smart enough. They should not provide, when I say smart, is that they must be specific, accurate, on what? Result oriented, and I think they must be achievable something. So basically, you need to define them very well. They should provide you enough clarity. Now, as an organization, you need to do your SWOT analysis. You need to look at, when I say SWOT analysis, I mean your strengths, weaknesses, opportunities, and threats. So you need to look at what is it that we have as a group. You are a united group of people, you are perhaps very young people, you're still earning your jobs, you're still earning salary and everything. So an investment club owned by members who are already working has a very big chance to survive more than any entity, because many people start organizations which they want to depend on immediately. In most cases, investment clubs look so much into the future. So you can build that entity with the little money that you have, get back the profits and invest them again without being. So these are the weaknesses. Of course, the opportunities, these are the strengths that you have. But the weaknesses that you have is that you might be young and therefore inexperienced in the area you have. You perhaps small entrance in the area that you've looked at. All these are things that you need to do. But then after looking at all these things, you see, how then shall we approach? So the next option would be develop the different ways on how you're going to achieve these objectives. So you line them out, and then you choose your plan of action in order of priority. And then you make sure that you develop and consolidate these plans of yours into a document, which you will make sure that you will always refer to as members. So strategic planning is basically understanding the challenges, the trends, and the issues, such that you are able to determine the most effective and efficient way that is possible to achieve this mandate. Of course, you also look at who are the people that you're serving. As an investment club, you're serving the clients that you have, you're serving the members that you have. You also have a responsibility to be part of a certain community. If you are an investment club of people in a community, let me say in your home district, you are an investment club within a school or a university, then the community that you live in is a key stakeholder. Personally, I want always to help clubs. We always want to, and when even we have some people want to learn from us, we are ready to help them start up. So you are helping. At the end of it all, we look at a number of offshoots of investment clubs that have looked up to us to start and build their own investments. So it is important that you play a role in your community. Of course, as members, make sure that, just like I've said, the objectives that we have looked at and the goals are well looked at. So there is, this is quite academic, but it is very important. I needed to put it in this presentation because it is important. Remember, I told you that we are trying to build ourselves into an institution, which then will become a business. So you look at what are the objectives that basically you look at the environment in which you're operating, the environment that you're looking at, and the most renowned model that has been talked about is Porter's 5 forces model, which looks at 5 key parts of any business: the competition, the suppliers, the buyers, that is the consumers, the substitutes, and the market that we operate in. So the intensity of competition is very important, because if you go into a market that is very competitive, sometimes entry becomes very difficult. So even the level of supplier power is important. If it is very difficult for you to get supplies in whatever business you want to do, then you will struggle. Then the buyers must have also a entry and exit cost ability, because if this is not there, they will also struggle to want to buy. For example, if you've decided to go into land and it's very difficult for these people to sell off their land, then they are better off not buying your land if that is the business that you've chosen. So there's also the issue of substitutes. Now, if you go into a service that has so many substitutes, you're also going to find yourself struggling. I think one of the businesses that I've known that has struggled is bread, where you find that some people, if you're, let me say you are branded as in Turkey, there are some people who will want to also put bread, supply bread in the market with the Turkey branding or whatever, or maybe Superloaf or whatever. So you need to be very, very, very serious when you look at this, because substitutes also reduce the prices that of an original product. So they affect the competitiveness of such a product. You need to look at access to the market access. So if the accessing the market is very difficult for new entrants, then again, this becomes a problem for you as an investment club, because you are a startup. So it means that you need a lot of money to start, and as an investment club, you start slowly in small amounts until you build. So the strength of each of the above negatively affects the overall likelihood of profitability. It's important that you look at all these. So the whole process of planning starts with planning, execution, and then monitoring. When I talk about planning, you gather information, you document the actions, the financial plan is very important in this whole matter. The words can be so many, but the financial plan is important. So you need to, when I say financial plan, we expect that you're able to look at the figures of the incomes that will come in, what your costs will be, and what is the envisaged profit that you want to have. These do not have to be very voluminous documents. These can be very small documents that you can build as an institution and that are within your means to understand as a people. So then when we talk about execution, we expect that you will put organizational structures and systems, which will then implement and will also secure the resources that will make you achieve your goals. And then, of course, after you have all this execution in place, you need the monitoring and control bit of it, where you must do performance review against the plan, where you find that there are certain things that have gone haywire, you correct them, and then also you update your plan whenever you get new findings. So that is a very important aspect. That is the summary of managing your plan. So I think we've talked about the process of planning. So now, what are these elements of planning, that investment planning? You look at the time frame. So you need to make sure that you look at, if we've decided to invest in this, how long shall we be in this investment? And what is the expected amount? What shall be the financial situation at the end of it all? You need to make sure that you also plan the tax position, because if you don't do this, this can take out your whole profit. And some businesses have been forced into winding up because of the tax man. So in this investment planning, you look at risk tolerance. You look at the return on investment that you're going to have. What kind of returns you require and can reasonably expect. You see, I will tell you that some businesses have been built, some people want astronomical profits. So someone will be told that, we have so-and-so who invested in this. He went to China and he has built an arcade in 3 years. So someone will tell you, oh no, we actually went and put our money in a casino and we got money. Now you need to understand what type of risk you want to take on. In most cases, when you're members, you will always take your average risk as a group. There are people who are very ready to invest in high risk assets, and there are people who will want to invest in low risk assets. So as an investment club, you must reach the medium risk tolerance that you need. So, and so this risk tolerance determines what you expect. One of the best benchmarks of monitoring your return on investment is looking at the TB rates, the government rate that it gives you when you invest in their securities, because the most risk-free investment that is known, at least by economists and investors, is the government rate that it gives to you when you invest in their debt tools. So this government rate, specifically here the treasury bill rate, will help you to understand, okay, if I can get something above the treasury bill rate, then I am okay. So if you're going to get anything low than that, then you're better off not investing in that, and you go into the minimum investment. So all these are things that you look at. But I will also tell you that over time, you will invest in things that do not give you that full return. But as you make money and losses, both profit and losses, you start learning how to even grow that small rate. You may start from a lower rate than treasury bill rates, but eventually you start learning your trade and you start making bigger profits. So in this whole plan, you, after determining your rates, then you need to check on your investments. You need to monitor them. So you need also, one of the biggest problems that we have in investment clubs is that members do a lot of work. But over time, and this we have also learned as an investment club, is that the members are very human resource for the business that you try to do. But along the way, the conflict of interest emerges, especially you who has been a banker. I'm very keen to make sure that I do not compromise on my, so I even declare to where I have been working for all my time to show that I'm part of an investment club. And when I show that I'm a member of an investment club, I make sure that I give the club some little time, but we also create capacity for an external management team, for us to create a management team. So we try to define where we will come in and where the management team will come in. So this is important, because if you don't manage it, it will overwhelm members. Members, as you age old, you get more, I don't know how to call it, you get more committed to your jobs. So as you get more committed to your jobs, you start becoming conflicted, and you start ignoring the investment club. And actually, for some clubs, this is where people start even fighting and deciding to withdraw their money because the club is not working. So you need HR planning as part of your strategy, such that at some point, as you get busy, you're able to get somebody to pay to do your club, to do your work. So one of the other elements that we need to look at is what we call the investment policy statement. An investment policy statement is a tool that in most investment businesses do. Pension funds, unit trust funds, all these, they use this, and these are they help them to set rules for investment and also manage the risk of loss. This will help, this investment policy statement will help investment clubs from going into gambling. They will help you to fight insider conflict of interest. And this, the major parts of an investment policy statement, please get some time and look at them. Most of these things, I have looked at them from a very a high level bit. For those of you that would want to be able to be helped to do this, I would be available to support you. So you make sure in the investment policy statement to have a purpose, you must have objectives, your constraints, you must have the investment universe that you want to look at. When we say the investment universe, we mean that you must look at which areas do you want to invest in. Is agriculture part of it? Is the stock market part of it? What is it that you want to do? And how you want to allocate your assets. What percentage do you want to give to agriculture if it is part of it? What assets, how much do you want to put to private equity if you want to do it? How much? So these are a number of things. In subsequent slide, we shall be able to look at where are those investments that we want to do. So what is the type of execution that want to do? How do you want to monitor? So all these are very, very important. So what should you invest in? We've talked about the money markets. This is where we find the government and corporate debt. We have hard currencies. We have property that is land and rental income. There's small businesses, transport business, lending, trading, etc. There's farming and agriculture and forestry. There are stocks and equities. Either you invest in listed or unlisted companies. And then there are also unit trust funds. So these are a number of options available. As an investment club, we have invested in unit trust funds, and this we've done religiously. And it was after some time when we had learned, because some people did not believe in them. But I think we realized that whenever we had funds on bank accounts, these bank accounts, some of the money that we were putting on bank accounts was not giving us the returns. At some point, we found ourselves having more than 100, close to 200 million on the accounts, and this money was doing nothing. As soon as we put it in the UAP Trust Fund, we started getting good money, and I think our balance sheet grew very fast. So we have, since that time, put a good amount of money in unit trust funds. We have invested in stocks. This I will not lie to you. It has been quite difficult. And so it's something that we are still learning. We've not gone into farming, though we've invested in property. We also have a money lending license. We had to build another company, to set up a company owned by our investment club, to do our money lending. So these are things that we continue to learn, and we hope that over time we shall cover most of these areas, and we shall be, as a business, we shall have interest in quite a number of these areas to invest in. There are a lot of other areas to invest in. You basically know them within your spheres, but I could only list these that I have presented. I'm about to finish. So I have talked about your risk appetite. I've talked about risk return on investment. And please, I also said that the key considerations are the government treasury bills, but we also need to look at the exchange rates and the inflation rates in the market. This will require you to look at these things. I need to advise to you, members of investment clubs, that there are people who know these factors more than you. Please utilize them. Some of them will not even ask for a lot of money. Actually, within the circles of investment clubs, I have even seen one of the members here being one. I know one of the guys here, and I think that is Andrew Muhimbise. He's a very good expert he's a very good expert in analyzing investments. So some of these people could give you great outlooks. I think you need to utilize them. I did not mean, I think there's one other gentleman, William Nyakatura. I'm not so sure whether he's here, but I know that he's part of this big, he's one of the guys that keeps on looks at investment very seriously as a passion. So these guys, when you look out for them, there's also, I think, Kenneth Legacy is also a very good man whom I know to support investment clubs in understanding investment. So we can utilize these resource guys that we have without going to the big guys who are going to ask you for an arm and a leg to invest. So, but then as you build, as you plan as a club, what did you do? Benchmarking as a club strategy. It is very, very important. Kenya has the most successful investment clubs that we know of, some of us. And I think Centum Investment, which also is listed on the stock exchange here in Uganda through cross listing, is one of the biggest big ones. I will have no time to explain, to give you the history of this. But if you have some time, please do some Google and learn about this Centum. There's Transcentury. It was one of the clubs that Transcentury was one of the, it was an investment club set up by the Kibaki regime, the Kibaki guys when they were young people. And when they eventually got into power, we were able to do a lot of things with Transcentury. So the Chairman of Kenya has quite a number of others. I think as people, we should learn to do this, because benchmarking helps you to understand where you want to go. Okay, I have seen a question where someone is asking, where do you want to be in 2050? Yes, I will tell you, I will answer that when we reach there. But I will tell you that we might be having a dream today, which can change another 5 years ahead of us. So you need to make sure that you benchmark and continuously change your position. There are many other investment clubs within the ICAO. Please associate with them and benchmark. There are banks like DFCU and Centenary, and I think Finance Trust, that have banking investment club for us. Please try to look at this. There are other peer clubs that are not part of ICAO, that are not even this DFCU. They are very silent out there. As a bank, I have seen many of these people make money. So please try as much as possible to look within your universe and get, basically you do more research and there's no limit. So what are the priority areas of planning? You need to invest, you need to determine whether you want to go, what investment vehicle you want to do. Many people don't know this, but if you choose an investment club as a circle, it has its own limitations, it has its own advantages. I think I saw one of the questions where they said, circles do not pay taxes. So what is it that Group 20 looks at? Now for us to land, as a circle, the law did not allow us. I don't know whether it still does, but as a law, I think, and I will beg clarity from any lawyers that we have here. But as far as I know, circles cannot own land. So it means that when they own land, they get members who own the land in trust of the circle members, which can create a lot of legal challenges when you have a dispute. For us from the right to go, we decided to constitute ourselves into a limited liability company, such that we are able to own land, because that was, again, that makes a very big chunk of our investments. And so investing in property was very key for us, and the club was important. So the other area, just like I've said, is determining your vision, your mission, and purpose. Then what is then the investment policy statement? This is very important. We have had situations where people come to us and they say, hey, look here, what do you chief now? And someone gives you a very good deal. And this deal, when you look at it from the face of things, it is very sweet. But also, if it went bad, it would clearly soup the whole club of its money. So when you have an investment policy statement, it helps you to stay calm and stick to your plan. Otherwise, gambling is real. I know of an investment club which was registered as a circle. And when there's a man who had, I think a Nigerian guy, who had come in with his so-called iPads. And I think I don't remember the whole story around the profitability, but the profitability story around this investment in iPads was very sweet. And they had to check out 80 million. Is it 80 million? Yes, 80 million to invest in this whole thing. I can assure you the money did not happen. And the next time I saw was that this Nigerian guy was arrested because he had fleeced people of their money. So when you have an investment policy statement, you are going to avoid those things, because even that policy statement has even the procedure of how you want to invest and how you're going to follow. Because for us, the originator of our deals is our investment committee. So the investment committee must provide a business case to us, and this business case must be written, and then we discuss it and approve it at the General Assembly level. So it's important that, and it must be well researched. It must also have the figures showing what we want to achieve. So then the business plan helps you to assess what you want. It must have an operational plan. You must also have the regulatory plan. When you talk about the regulatory plan, it means that you must adhere to the tax guy. You must get trading licenses. Just like I've told you, for us, one company that we put up to do money lending has the license to do money lending. So we are not going to find ourselves in trouble. At some point we actually did it, and we even reached a point where we went with somebody to court to sort a certain issue. So it's important to avoid some of these things. So your regulatory plan must be very clear. So what are the threats to investment clubs? Informality. It is the first thing you must do, is that you must register. It can be a circle, it can be an association, it can be a partnership, it can be a limited company. it can be a trust. Gambling is the real threat to investment clubs. Leadership is also a real threat. You guys must, when you're looking at your strategy, you must look at your leadership very well. Many people like looking at leadership in such a way that they want to rotate it. Sometimes in business, businesses don't run like political institutions. Our experience as Group 20 told us that actually you can run with the same leadership for as long as you're able to check it. So, and one of the most important things that we had to do was to make sure that we have our regular monthly meetings in place such that the leadership is accountable. And when we were able to change, we were still able to, again, to learn our mistakes, to build on them, to make our leadership better. But again, rotating leadership has the advantage of making other people own up and to understand, to build consistency among yourselves. Concentration risk is also a very big problem. At some point, we invested a lot of money in land. Until when we started, we realized that land was holding a lot of our money, and we started reducing. So you find that you have over 300 million in lands, but you're struggling to even resolve a very quick need of about 20 million. So these are things that you need to do. You need to make sure that, but also concentration helps you to avoid the risk of losing money if you have that money in one area. So you need to look at what diversification, you diversify, look at various investment portfolios and invest in them strategically. Demographic and personal concerns. When you are a member of an investment club where you have people of 20 years and guys of 50 years, you need to be very careful. I'm sorry, I'm not trying to spell doom on those investment clubs, but in most cases, at 50 years, I'm trying to become, I tend towards being selfish. At 20 years, I can make so many mistakes. So I can gamble a lot of things. So you need to look at a lot of issues. Age, your culture, your professional levels. If, for example, you have educated people and non-educated people as part of the investment club, then you need to play, there must be other factors that put you together. So basically, these demographic and personal concerns, they build consensus in the club. So corporate governance is very key. You must have a constitution. As a club, we had our articles and memorandum, but we also had to put up a fully registered constitution that we had to also register with URSB as a legal document, such that if there are certain areas that are not covered in the articles and memorandum, they are able to be captured. The issue of regular meetings, I've talked about it. We have religiously held annual general meetings every year and documented. So these are very, very important areas. There were 2 years where we missed this, and again, we also learned our mistakes. So lack of knowledge is also a problem. We must make sure that we, across the board, we all learn and disseminate information. You should avoid having your WhatsApp groups discuss very, I don't know how to call them. There must be serious issues that you discuss as an investment club. We rarely have so many of these, a lot of social media is full of a lot of things. There are many, on our club page, we don't allow so many, some things which are not going to help us as a club. So it's important that your investment club continues to give you knowledge. Then you must also have accountability. You must have systems and controls in place. We have had a number of issues where we have allowed the business to be run by people, a certain group of people, and those mistakes have happened. So we find that there are certain controls. Maybe we've had problems of internal learning and everything. So what we have learned is to make sure that your control is in place. We've also made sure that we invest in systems. Consistency in payments. Investment clubs must ensure that people pay monthly, or if it is quarterly, it must be quarterly. But of course, monthly is the best way. Then you should also avoid unprofessional and cheap labor. I think I've discussed this before. So thank you so much for your time. I will invite questions and answers. I'm sorry if I've been too fast. I would go into the chats. Should I go to the chats before I.
Yes, thank you. Thank you so much, Mr. Godfrey. It has been a very insightful presentation. And indeed, straight away, we'll get to the charts and look at a few questions that we have in there. To begin with, we have, this was Mr. Andrew say, thank you, Godfrey. Kindly shed light on how you separate ownership from management. And secondly says, what is G20 minimum return on investment per annum? You hinted on bills.
Okay. Yeah. Yes. For a long time as Group 20, we were running this entity. So we had we were running it from one member. I remember I was the chairperson, so I used to have a checkbook in my desk at the office. And so whenever something was required, I would seek out a signature for another member. I go to their office, wherever they are, and then I ran to the bank. So that meant that I would kill off some of my working time to go and stand in the queues in the banks. And this was quite difficult. Over time, it became very difficult for me to do, but also it also meant a lot of issues of geo control and other things. So what we did at some point, we had to employ somebody to run our operations. We had also to put up an office. So whenever this person needed something, they would come to us and we support them. But again, in terms of over time, we started realizing also the quality of the human resource was a problem. So you get somebody who is running errands, but in terms of making decisions, operational decisions becomes a problem. So you find that as a group, again, we had issues. So recently, so what we did, we had to appoint a strong operations manager. As I talk now, we have built a structure where we have an operations manager and a business manager. And then, of course, as the business develops, we shall have that. Then what we also decided to do was all of us, the 12 people, over time, we actually got out 2 people. And so we are now 10. And so all of us were directors. And so it was very difficult to make certain decisions. And what we decided was that, okay, we can, all of us, the 10 can become shareholders, but only 4. 3 should become directors and 1 of them should be a company secretary. And this was based on the experience that they have, basically from our experience, the commitment of these people to the club. And we have seen this simplify. So the leadership of 4 then makes sure that they have the operations team reporting to them. And we are accountable to the assembly, general assembly now. We have stopped the monthly meetings for the general members. So what we do now is a quarterly meeting, but the executive meets monthly. So the process basically, to answer you, Andrew, is that it has been a gradual process of empowering the operations office to make sure that they can do. And also another thing that we have done is to have a system in place now. We have a core accounting platform that we have paid for that allows somebody to enter these figures and to make sure that all our transactions are recorded by them. And the operations manager goes to the bank for as long as the management team has signed. Then what is the minimum return on investment per annum? Just like I've said, our interest over time, we did not have this well defined. And so we invested in businesses that gave us less than the treasury bill rate. But from the last 3-4 years, we now are looking at a minimum of 10-11 annual income. But of course, we have also seen like our land business, it can give you even more than 20-30. So it's now what we are building on it very seriously. We also had a problem with our money lending business also, which at some point went into losses because of the mistakes that we did. So by institutionalizing it, again, we are seeing ourselves having returns which are above 10. But of course, that is also after we have also had our costs very well managed. I hope I've answered that well, Andrew.
Yeah, you have. He also goes ahead to say, he says, share on the G20 tax planning. We know SACCOs are exempt from income tax. What percentage of revenue do you, I think he meant pay in tax? Then the other question he says, planning, how will the G20 look like in 2050? Maybe you can elaborate on that as we proceed.
Okay, I will put it this way. Just like you had said that SACCOs do not pay taxes. I think that is one of the advantages of having SACCOs. But just like I've told you, they do not have property owning rights. So as members, you risk having your assets being registered in a manner where you might have very little interest in them. So you need to be careful because you have limitations as a SACCO. But for us, we've been able to pay a number of taxes. I think one of them is we're now paying pay as you earn for our employees. We're also paying the corporation tax of 30%. We also pay a number of duties, especially now that we're involved in land. So we pay the stamp duties and everything. So that is what we do. Not so sure whether I've answered that bit on tax. How will G20?
Yeah, how will G20 look in 2050?
Okay, just hold on.
Strategic planning, yeah.
Okay, just hold on. I want to share something. I am coming to you with that.
Maybe as you come, I would also like to remind members that our next webinar will be on 25th of February, 2022. We'll have our next webinar. And also, for those who may need this presentation, you can as well share your email or the chat room. I will capture it and actually revert back to you. Back to you, Godfrey.
Okay. So I hope you're able to see my screen. This is an excerpt from our constitution. So we want to be the model investment house or club that guarantees the social and economic security for its members. I hope that has been understood. And we commit ourselves long-term investment in a diversified portfolio that guarantees value for our stakeholders. We're looking at stakeholders as many: members, the community, and even government. So those are our values. Sorry, that is our mission. So our values are, we call them DISC. Diversity is very key because we know we are very different in opinions. And actually, when we are quarreling, it can be very passionate. Integrity is a very key part that we put there. But above all, we must have solidarity and then commitment. We must be committed. So these are our core values. And we look at ourselves as a group that is having humble beginnings, and that will be our strength and foundation. But what do we look at 2050 from now? At 2050, by 2050, all of us shall be out of employment in terms of where we currently work. We shall be very old people. We expect that G20, Group 20 will be looking after us because we have been looking after it over the last 12 years. So we still have a lot of commitment, and we expect that our investments in land, our investments in lending will be looking after us by paying us a profit and a dividend.
Oh, yes. Thank you, Mr. Godfrey. We really have so many questions and our time is really fast spent. Maybe we'll take some 2 or 3 so we can wind up so very fast. However, just a reminder, I have been reminded that our next webinar shall host Professor Waso Barunya during our February webinar. So just stay tuned and you will be furnished with all the details. Now, I have a question here. I think someone is asking a very key question here, asking, Norman says that wouldn't running under the same leadership beyond the stipulated provisions in the laws governing, for instance, SACCOs contravene such laws and cause issues. Right. Yeah.
I'm sorry. I'm sorry. I am not. I might have. I might have missed that question. I just need to. You need to see it here. I am not seeing that question.
Yeah, it is by Norman. Maybe just repeat. Just repeat it. It says, wouldn't running under the same leadership beyond the stipulated provisions in the laws governing, for instance, SACCOs contravene such laws and so cause issues.
Okay, I will put it to you this way. Our experience as group is that investment clubs cannot run be run as political institutions. I think one of the biggest examples of business leadership, we have all seen that it took so many years for people like Bill Gates